All right, guys, welcome back. Back to the next edition of the Financier. Today, we'll talk about Buffett's shareholder letter. His 2020 annual report was released on Saturday. It was pretty good. It's always one of my favorite reads of the year. He talks about so many different areas of his business. Obviously, he's got a gigantic company. We'll talk about his operating businesses today, what makes up his portfolio, why you should read this letter, what he's focused on, what he did in 2020, and his plans for 2021. Obviously, he's getting pretty old, so he's got a lot of things about succession, investing. He still invests for the long term. He talks about some of his shareholders that have been around since the I think 1956 or 1962. He's definitely a long-term guy. He still commits to that thesis. So today we'll talk about his shareholder letter. If you have any questions or comments about his letter, let me know your thoughts on it, his investing strategy, what he's invested in, what you think he's doing right or wrong. I got the comments open. I got questions coming in, so feel free to keep chiming in. Let me know what you think. So without further ado, we'll hop right in. So he released his shareholder letter on Saturday. I've been reading all of his annual letters. I've read every single one since 1956. It's an amazing book of letters. I think Bill Ackman was the one that said that if you want to learn about value investing, all you have to do is read his shareholder letters. You don't need anything else. He breaks down finance in the simplest form. He discusses why he makes an investment, what's the thesis behind it. He focuses on his core competencies. He says, all right, this is where I'm sticking. This is what I'm sticking to. We'll talk about what his core business is in a minute. And then he says, how can I make this better? How can I enhance my moat, my circle of competence? What can I do to improve my investment strategy? And he doesn't sway away from it. He's got two forms of investment positions. We'll break those down on the next slide. But he really focuses on insurance. So we'll begin with that. Let's first talk about what happened in 2020. First up, he made $42 billion. A lot of money for anyone. Huge for Warren Buffett. It is worth noting that he made $42 billion while writing off $11 billion in losses. So just like anybody else, he did take a big hit in 2020. He actually was down 9% in operating income. So it's a really big cost for him. He's no exception. He also is, volatile, and he doesn't. He's got pretty good businesses, but they still get impacted. So 9% is a big hit, but it's not as big as other industries, which he's avoided. The big notable sale that he made, I think in the spring of last year, was to sell off all of his airline positions because it'll take years for that to come back online. Before we move on to his investment, I will mention that he hosts an annual shareholder meeting every year. I went to it maybe 4 years ago in Omaha. Obviously, it's been postponed for the foreseeable future. It brings in 30, 40,000 people, which is pretty amazing, to the Stadium Center in Omaha. This year, he's going to be in LA to host this meeting. It's going to be live streamed again. Becky Quick from CNBC is going to cover and answer all the questions for 4 or 5 hours. So if you have any questions, definitely email. I think it's brookshire@cnbc.com. Reach out to her with what you think to follow up after this live stream. And it's happening in the first week of May. He's been doing it for 30, 40 years. It's really well attended. It's been a great way to connect with other value investors. So let's dive into his operating businesses. So two areas that he invests in, two major ways that he invests, I should say. First up is his insurance business. It's a core asset for his company. It actually is it's the property and casualty business. It's his favorite way to invest because he breaks it down into one specific way. He looks at the float of the business. He invests that float. He underwrites the insurance policy so it's profitable. He makes money from that insurance policy, and he reinvests those float cash into long-term equity assets. And it's really, really profitable for him because he's making money on both ends. Insurance companies only usually make money from investing. They lose money on underwriting because they are really cyclical. They don't have the operating cash flows that Buffett has, which we'll talk about from his control investments that are very high yield, high profit. That gives him a really strong capital advantage, which is necessary in the insurance business. And on the second part of his business are non-control positions that are in the stock portfolio. This is a marketable security position. He's been doing this for many decades. It's worth about $281 billion today. It owns companies like Coca-Cola, Apple, American Express, all these big investments. They're very concentrated in that sense. He is very long term. I think he's held American Express since like 1970s, and he continues to focus on this. He is an unusual conglomerate in that sense that most conglomerates will take a control position. They will operate the business. Buffett is very hands-off. He doesn't touch any of his operating businesses. He makes both control and non-control positions, and he holds for a very long period of time. So he's unique that he does this, and it obviously works really well for him. So let's break down a couple of the assets. There are 4 major assets that he covers. I already discussed one, which is the insurance area. Thanks, Jake. Yesterday was my birthday. Thank you. Let me know if you have any questions about Buffett today. 3 other core assets for his business are, let's break it down into the BNSF, which is the railroad business, Berkshire Energy, and Apple. So insurance is actually the core fuel design business for him. It provides him the capital to make more investments through his Berkshire portfolio. Several years ago, I think in 2010, 2011, he purchased BNSF. You'll know this company as Burlington North Santa Fe. It's the largest railroad by freight volume. It's a very asset-heavy business. I think it does about $8.3 billion in assets and revenue. Or that's what it made in earnings last year. Really capital intensive, very difficult to run because it's so it requires so much capital to reinvest. It's not like software or technology where it's very capital light or services. So he has accumulated so much money over the last 30, 40 years that he could reallocate a large portion of his capital into areas that become a moat because it's defensible. Right? They're not making railroads. It's very expensive to get into that industry. It took about 150 years for the industry to mature and consolidate to the point it is today. And the railroad infrastructure today requires a lot of reinvestment and it requires a lot of infrastructure. So it's very, very well designed. It owns a large portion of the freight volume. So he has a little bit of a monopoly on the market. And if you've ever been in the Midwest, you'll notice how many railroads travel from freight trains travel from state to state. You may not see it as much on the coast, but it's a very heavy asset in the Midwest, which is a large portion of the country, right? There are 100+ million people that live in between the coast, maybe 200 million people. The second major asset for the company is Berkshire Energy. I think the name of the business he acquired several years ago was Mid-America. This was a really big asset for the company. Energy utility business is a very slow growing, slow compounding, heavy regulatory business. Again, it's a shift away from his traditional finance and other assets that he's acquired over several years. This is he invested last year in about $18 billion in the business to upgrade its power grid. He understands the need to invest in renewable energy. He's talking about how he has to catch up again with other competitors in the space. It's very difficult. It's very competitive. And what's unique about Berkshire Energy, it doesn't provide a dividend like many other utility companies do. Utility companies are required to provide X amount of yield to their owners, to their investors. Berkshire Energy is about 34% owned by Berkshire and will be, I think, about 80% owned in the next 3 or 4 years. So he's acquiring controlling position in this company. I think it's going to be a very critical asset after he passes away, and it's going to be a very good compounder because energy, just like railroads, is a core infrastructure asset in America, and it's definitely a core piece of his portfolio, being one of the top 3 assets outside of insurance. And then last but not least is actually Apple, which is the most unique outside business for him, given the fact that up until a few years ago, he never invested in technology. He stayed away for it for many years. But 6-7 years ago, Apple designed a very strong competitive moat in this business, had a very high margin product, which was the iPhone about 10 years ago, really released in 2009, 2008. Then they built upon that ecosystem. Now they can sell products at very high premium. They have a lot of cash. They were selling for a very cheap multiple several years ago. So they became the typical value play for Warren Buffett, which is unique and really helped him out. Today, he's built up a large position. At the beginning of 2020, he owned about 5%, 5.2% of the business, which is a large stake of Apple, given that Apple's $1 trillion business. Given the fact that Buffett has done two things in the last year, one of them we'll talk on the next slide, but we'll talk about Apple first, is that Apple has made billions of dollars in buybacks. And from those buybacks and the dividend, Buffett has increased his ownership position from 5.2 to 5.4%. So just about a 10% increase, given the economics of the dividend too. So he has made a ton of money from this investment. He has a very low cost basis, and it's the biggest stock position from his portfolio. So it's really, really worked out for him. It's worked out for a lot of other people as well. So regarding buybacks, last quarter alone, he bought $9 billion in stock. He bought another $9 billion in third quarter, making it about just under $25 billion in buybacks in 2020. Really big number, not unusual. He's had this strategy for several years. I think he'll slow down the strategy going forward, but he's always mentioned in his shareholder letters that he would buy back the stock if he can at a 10% discount to intrinsic value, something that's unique because a lot of other CEOs and investors will buy back stock at any price. He's very disciplined in his approach. He'll buy back the company at a discount. He's doing that aggressively for two reasons. One, he thinks the company is cheap, and two, he has a lot of cash. He has $100+ billion that he needs to invest. So reallocating that capital to buy back with $25 billion actually increases your shares or ownership percentage as a Berkshire shareholder. So this is quickly to debunk the myth of buybacks in the world of stock investing. If you're an owner of a company, and let's say you own 1 out of 100 shares, that's a 1% ownership. And let's say a company like Berkshire buys back 20 of those shares of the stock they own, and that you also own because you own a 1% stake of it. 20 shares would be 20%. And if he does that, that actually increases your ownership percentage from 1% to 1.25%. So increasing your stake by 25% by doing nothing besides using the company's cash to acquire more shares, more of the outstanding shares. So reduces the float and makes you a bigger owner. So I just want to debunk that buyback myth. A lot of people like to argue against it, that it's not capitalistic, it doesn't help anybody. But as an owner, it's actually something that you want to happen. You want it to happen because you want to increase your ownership. But on the other end, you want the company to reinvest in areas that it will make more money. And if there are no choices, you can't simply just hold cash to hold cash. You have to have some strategy. So he in 2020 wasn't able to make any major acquisitions for obvious reasons, given the fact that the economy is doing very poorly, and his operating earnings actually decreased by 9%. So he missed two big targets that he's usually pretty consistent on delivering, over delivering on earnings, and usually making a really big acquisition sometime in the year. So it's a big change. I will mention that he has been long America. A majority of his assets still continue to be in America. He continues to invest in the country. It's an amazing story that he's been operating like this for over, I think, 60+ years. Hey, Raj, let me know what you mean by a treat. So he continues to do this. He continues to do a great job of talking and walking the long-term value investing play, saying this is where you should put your money. This is where I'm putting my money. If you think it's a good idea, maybe you should just invest in Berkshire. It's worked out really well. One of the things he mentioned in his shareholder letter this year was that he had four doctors that first invested with him in 1956, and they've continued to be investors till today. They're about 100 years old. I think one of them is 105 years old. So so they have invested with him for over 50 years, and they've compounded their growth. They probably made hundreds of millions of dollars, which has been amazing. and it's worked out well for them. It's worked out well for a lot of shareholders. I would recommend reading his annual report if you get the chance. Uh, it's a great read. It's about 14 pages, very easy to read. He talks about a couple other things that I didn't mention in the slides today. I'll say if you got any questions, feel free to comment them below. He talks about 2-3 major homebred acquisitions that he's made over the last few years. He talks about Clayton Homes and another business that were, I think, in Tennessee and Kentucky. Just thoroughbred entrepreneurs that built their business with nothing, started with nothing, then designed a huge business and sold it. He's got 2 or 3 famous deals like this he talks about in a shareholder letter every year. The most famous one is Nebraska Furniture Market, based in Omaha. It's one of the most profitable furniture businesses in the country. It was built by Rosa Blumkin, who passed away at the age of, I think, 103 or 105 years old. She ran this business for 50 years. It was very competitive. It's one of his most notable investments. He bought it cash. He bought it on site without auditing the books. So he had a lot of trust in Rosa and operating a fantastic business. He did the same thing when he bought his first insurance business, National Indemnity, which was also based in Omaha, Nebraska, before he bought Geico and many other insurance companies. So it's been a really good run for him to bet big on America. It's worked really well for him. He continues to do this. He continues to buy manufacturing assets, continues to buy a lot of other businesses that do really well. And he continues to say this is the way to go. And I think he's right. So if you have any questions, if you like this type of content, let me know. Follow me on social, subscribe to The Financier. Let me know what you think about either a Berkshire, Warren Buffett, or his 2021 investment strategy. I think there's a lot more to come up for the next 10 months in 2021. It's very exciting to see what he's talking about. I will be tuning in on his live stream in May. It's always has a good consistency of questions. A lot of things from inexperienced and experienced investors come on stage and ask Buffett about his strategy. They break down everything. I've seen a lot of the top hedge fund managers have attended it for the last 20, 30 years. So it's definitely worth your time. Again, if you haven't read the letter, feel free to download it. It's available on CNBC or BerkshireHathaway.com. Until next time, Raj, I'll definitely be moving these. I'll move these into the evening. I'll figure out a time. I'm trying to figure out any time between the afternoon and the evening that works best for everybody. So we're still consistently trying this. These live streams are recorded. You can check them on YouTube or on LinkedIn. I know mornings are pretty busy for everyone too. So let's see what I can do. Well, it is 1 o'clock, but I'll see what time frame works best for more people as yourself. So let's see. We'll do 4 or 5 o'clock, maybe in the evenings. That might make sense in the future. So I'd love to test that out. Love the feedback. So keep it up. Until next time, this is The Financier signing off. I hope to connect with everybody soon. Always feel free to reach out to me via email, Twitter, or on Quora on LinkedIn. Active on all the social platforms. And I look forward to hearing from everybody very soon. Until tomorrow.